Hi, it's Lee, and welcome to the Test Economist. We're all hearing a lot that the recession is coming, or even here already, according to some people, although we don't have the usual characteristics of a recession or market crash. We don't have our usual bubble that's popped. Crypto possibly was starting to show some signs, but that was curtailed early enough. Now, I'm smart enough to know that I cannot predict the future. And as they say, economists have predicted about 7 of the last 3 recessions. I do, however, like thinking through possible scenarios. I then assign a possible percentage of the outcome to said scenarios, and I may even invest according to the potential outcome. I'd like to run through one possible version of the recession of what we might see if it goes into full swing. Again, I'm not married to this idea. I'm merely exploring it with you and talking about how it may happen, and would also love your ideas on it too. Right now, we're experiencing inflation. The reason being the governments have printed so much money due to the COVID crisis. Now, the governments are doing what they can to cool the economy. A lot of people have made a lot of money lately, especially those invested in real estate. A lot of people have real estate. I think I remember a statistic that was crazy high about the percentage of the 1% that made it to the 1% through real estate investment. It was well over 90% of them. It's not just real estate too, but most of the stock market is still up around 50% since the start of COVID, and it was around 100% before the governments started to intervene. These are huge gains in wealth for those that had the right assets. Governments are doing what they can to try and break the back of inflation. We're seeing rates increasing, attempts at quantitative tightening, doing what they can when it comes to monetary policy, and residential property has been hit a bit as a result. We're also seeing new fiscal policies too, with increased tax, along with corporate tax with the Inflation Reduction Act, and hiring a massive army of IRS agents. They're trying to scare people to stop spending, to cut back, with the adage of inflation being too many dollars chasing too few goods. But it doesn't seem to be working as well as they'd like. We have seen in the past that we've had inflation like this, and the Fed have gone all the way and increased rates as high as around 20%, just to grab it by the throat and throttle it. However, that was going back about 40 years ago, and since then, society has decided to take on a lot of debt. Everyone's been running on debt, more credit cards, loans, financing, and living in the now, and paying it off in the future. And this has only been further exacerbated by the low interest rates we've been experiencing for some time. When money is cheap or virtually free, this is all very affordable. But now the rates are increasing, and it's not so affordable. So a lot of people have a lot of personal debt, and with rising interest rates, that becomes less affordable. Of course, if their wages are also rising, then it becomes more manageable. Other nations have higher debt when it comes to property. Nations like New Zealand, or particularly Australia, have a lot of mortgage debt. These nations also don't have long-term mortgages of 30 or so years like the US, but often just 1 to 3 years. And the highest is usually only about 5 years. And in New Zealand, about 55% of people's mortgages are coming up for renewal next year. And when they have a big mortgage and interest payments may now double, it simply becomes unaffordable for many. Whereas in America, it is more so the government that has a high level of debt. And equally, when their bonds come up for renewal, they will have a much higher interest rate to pay. Spoiler alert, they don't have enough government income as it is. When you add increased interest on their debt, then they simply can't afford it. Raising taxes can only increase government income by so much, and definitely not close to this amount. Now, governments like Australia can't let their entire property markets collapse and a high percentage of their population lose their houses. Likewise, the US government can't continue to keep rates at which they can't afford. A lot of people think eventually governments have to capitulate and pivot one way or another. Equally, they don't want to just be predictable for people to simply profit from these absurdities. Therefore, they would eventually have to lower rates and or print money, as it's not sustainable. In other words, there is likely more inflation to come. We are in another bubble, but it doesn't appear as obvious as others. People are looking for the usual bubble signs in the stock market or real estate, but this one might be harder to find. In the 80s, we had Japan. The 90s, we had the Asian financial crisis, then the dot-com bubble, and of course the real estate bubble that popped in 2007, resulting in the global financial crisis. But where's this bubble? Sure, we saw SPACs crash and crypto, but it wasn't the end of the world. But we have out-of-control inflation. What kind of bubble is that? This is the currency bubble. How does a currency bubble pop? with more inflation. The chance I see of avoiding this is running this to as close to a crash as possible, trying to keep it as stable as possible, threatening the markets with scare tactics, but the markets might just call their bluff, as they realise there is very little that these governments have in their arsenal due to so much debt already mounted by the government. They have little actual control anymore. They can give the illusion they are trying to sort it by naming things like inflationary reduction, even though they will literally create more inflation. But if they can keep the economy chilled as much as possible with words, then perhaps the economy can work its way through. I'm not sure about this though. Anyway, perhaps supply chains will improve, and perhaps the transitory elements of inflation will at least ease. Maybe long enough for oil or energy prices to also reduce. Perhaps they hope the war will come to an end, and other such measures might eventually take effect, and they can try and keep a lid on inflation for as long as possible until it all eases. In the meantime though, we have high employment rates, with a lot of demand for more positions. This should really mean that inflation trickles down and wages do eventually rise. I kind of feel like the old Soviet saying of, they pretend to pay us and we pretend to work, is apt right now. I think businesses will end up needing to pay more, to hire more people and work harder. This should see wage rises across the board. Of course, this would then eat into business owners' profits. Said business owners are also seeing price rises everywhere and need to make profits to get by too. Therefore, they would have to raise their prices of their products in order to make the same amount in real terms, which would further add to inflation again. However, business may be doing very well for them, as sales are up, hence why they needed to employ more labour in the first place. Anyway, long story short, wages might rise to adjust more or less for the new pricing levels. And what does that mean? Well, it would mean that people are now paying more tax. Everyone has more income, and then the government has more income. The income is much higher relative to debt. We have inflated the economy out of debt. However, this would likely leave a massive disparity in wealth between the haves and the have-nots, and we would face more inequality. But employment should remain strong, and we have demographics maintaining that too, with the largest generation already starting to retire, leaving positions empty with smaller generations to replace them. The next generation is of course Gen X. However, it's a relatively small generation, especially in nations that were most affected by World War II. The US actually wasn't too badly affected when compared to others, and is in one of the best positions when it comes to demography. The other risk is that governments go too extreme and really crash the economy. This can be hard to restart, and governments can make it worse. For example, after the 1929 market crash, the US wasn't into double-figure employment numbers until the government started to intervene and make things worse. If the war hadn't gotten the country out of the depression, who knows where they would have ended. After the global financial crisis in 2008, over $1 trillion or so was spent on the American Recovery and Reinvestment Act, and it had little effect. It's also arguable that Inflation Reduction Act may even be the necessary stimulus package, in a sense, that may be required if we do indeed hit a real recession. Something similar to the 2008 global financial crisis. This was tough to get out of. I even have a theory that partly what got us out was Apple with the iPhone, that started a whole new industry, an absolutely massive industry, that also created a product that gave us about $10,000 of other products, all combined in one little tool that fit in our pocket. It's innovation like this that gets the world out of these slumps. And again, we might see the industry of electric vehicles and renewable energy have a similar effect and really drive the economy, whilst offering deflationary products to combat the mess the governments have got us in. There's a lot of debt out there, and perhaps the only way to deal with it is to inflate our way out of it. The US government can't cover their government spending with tax, even with 0% rates, let alone a lot higher. But like I said, it's absurd to think you can predict how these things go. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.